Hey guys, welcome back to my channel. Hope you're having a fantastic day. Today we're going to try something a little different. Yesterday I did a much longer video and you guys seem to really like that. So today I'm going to do the same thing. I'm going to do another long episode. We're going to cover a bunch of different topics from Elon Musk, what he said about Bitcoin and Dogecoin on the Clubhouse app. I'm going to go over Dogecoin, if it could be the next massive short squeeze, if it could even reach $1. After that, we're going to talk about Chamath Palihapitiya, what he said about Bitcoin and cryptocurrency in general as well. Then we're going to go on to talk about Gamestop, AMC, other massive short squeezes that are taking place. After that, we're going to talk about silver, if Wallstreetbets and Reddit could actually cause a massive short squeeze there. And at the end, we're going to talk about a couple of other topics, including a very important update on Robinhood, restricting even more the number of stocks you can buy. So it's going to be a longer episode, and if you don't want to watch the full thing, I'm going to post clips for this on this channel, about 3-4 minute clips for each individual topic. If you want me to post these on a different channel in the future, let me know in the comments, but today we're going to try it all on this channel. For those of you who are new here, my name is Michael. I'm an investor and entrepreneur. Last year, our public investing account on Patreon, which is currently sitting around $620,000, was up over 105% for 2020. This year, our goal is to get it to $1 million, and we're well on our way to doing that. So if you'd like to see the investments I make in real time, when I buy stocks, when I sell stocks, if you want exclusive content that I don't share on YouTube, and if you want access to other portfolios and our Discord, well, then make sure to join our group. It is the first link in the description. So anyways, right now, Elon Musk says that he is a supporter of Bitcoin, and he thinks it'll actually get broad acceptance in finance. Just the other day on an app called the Clubhouse app, Bitcoin, he came out, and it's an audio platform where he could speak to tens of thousands, millions of people through this app. He came out and he said that I do think at this point Bitcoin is a good thing. I'm a supporter of Bitcoin, and I really think Bitcoin is on the verge of getting broad acceptance by conventional finance people. He said he doesn't have a strong opinion on any of the other cryptocurrencies, which actually is pretty surprising to a lot of people because he's always posting about Dogecoin. The other day, he said he posted a meme about Dogecoin, and he posted this magazine cover with a dog on it, and he spoke about Dogecoin. On top of that, he also recently changed his bio on Twitter. So he also changed his bio on Twitter to say hashtag Bitcoin. And after he said this, Bitcoin, Dogecoin, their prices skyrocketed. Everyone on Wallstreetbets was talking all about Dogecoin. It rose over 800% in just a couple of hours, really, in less than 24 hours. Right now, Dogecoin is sitting right around 4 cents a share. People are wondering, can it get up to $1? Is it even possible? Because it went all the way up from less than a penny to 8 cents in the matter of a day. So people are now wondering, could this be the next massive short squeeze? Could it reach $1? And the reality is, Dogecoin is most likely never going to be able to reach $1. And it's not because people don't like it or I'm trying to be negative. No, it's not because of that, but it's really because the supply of Dogecoin. Currently, there's over 125 billion Dogecoin in supply, in circulation. And right now, more than 10,000 Dogecoin are mined every single minute. So it's over 5 billion coins are put into circulation every single year, infinitely. So there is not a cap on the total supply of Dogecoin. That's unlike Bitcoin, which does have a hard cap of around 22 million coins. Dogecoin, on the other hand, has no hard cap, so it's infinitely going to be mining new coins, and that means it's going to continually dilute your position in Dogecoin. If 10,000 new coins are put into circulation every single minute, it's just going to keep diluting everyone's position. So it's really going to be next to impossible for Dogecoin to reach $1. A lot of people have been asking me that. Could it go up in the short term? It's possible for it to reach that 8 cents mark again. It could go a little bit higher than that, but in my opinion, I don't think it could go so much higher just with everything going on and how many coins are mined every single day. It's not like Bitcoin at all, and there is no limit on the number of Dogecoins that will ever be minted, and that just really restricts how high the price can go, because if more coins are always added and always mined, then your position is just going to continue to be diluted. So the prices we're seeing now, 8 cents a share, 4 cents a share, what it is now, I don't think you'll ever see those prices again long term. In the short term, yes, they might go up a bit, but long term, there's going to be double, triple as many coins in existence a couple years from now. So you just have to be careful with that moving forward. I think Bitcoin is a much better bet than Dogecoin. It's much more stable, and there is a hard cap on the number of Bitcoin. We've heard from Chamath Palihapitiya, Cathie Woods, Elon Musk. They all say that Bitcoin really, it does have a future in finance, but other coins people are just not sure about. We don't know what's going to happen, but Bitcoin is here to stay, and it's really not going to go anywhere. Chamath Palihapitiya, he recently came out and he spoke about Bitcoin. This interview is from a while back, but he keeps reiterating his stance on it. He says that everyone should have at least 1% of their assets in Bitcoin to hedge against anything happening in the economy. And what's going on right now is actually the first point that shows you that you want to have some sort of your money in an asset that's outside of the US dollar, outside of traditional economies and governments. Because right now, with everything going on with GameStop, with the pandemic, putting some money in Bitcoin is like hedging against something happening in society with a government, or like we're seeing right now with the stock market. It's not smart just to buy Bitcoin if the stock market's down, but long term, Bitcoin does have its use. And Chamath Palihapitiya, he says that he thinks everyone should have about 1% of their portfolio in Bitcoin.
What about crypto? Does that ever become an actual means of transacting?
Yeah.
It does still. And I said crypto. Am I allowed to say crypto? I hope I'm allowed to say crypto. Can I bring it up?
I would really like Bloomberg to take this article that I wrote for them in 2013 out of their paywall. But basically, my view at the time, which I've held since today, haven't changed, is that everybody should probably have 1% of their assets in Bitcoin specifically.
Or crypto.
I still believe that today. And I think it is just a fantastic hedge. So if you go back to the conversation this morning, when you see the amount of leverage the financial industry is running, and you think about all these dislocations and all these exogenous things that are happening that you can't predict, there's a lot of risk to the downside. And it would be great that an average individual citizen of any country in the world has an uncorrelated hedge. And I've said this repeatedly ad nauseum on this show. Every financial instrument is correlated.
But Buffett,
it's all fake, except Bitcoin,
but Chamath,
which is fundamentally
an uncorrelated hedge that Warren Buffett says has zero value, zero inherent value, unless someone pays more for it.
I think he's an exceptional person. I've learned an enormous amount, both from afar and the few interactions I've had with him. He is completely wrong and outdated on this.
Shouldn't the price have gone up during this coronavirus situation?
Haven.
It went down.
Like gold. If it was really digital gold.
I think that you have to look more at volumes. These are not necessarily event-driven strategies, meaning you don't
You
want
just called it digital gold.
No, he
I
didn't.
didn't say that.
No, he didn't.
That's
what people say.
I don't think I don't think when you wake up and you see a coronavirus scare in the Dow down 2,000, you should not be going in and buying Bitcoin. That is an idiotic strategy. I think a reasonable strategy is to say 1% of my net worth should be in something that is completely uncorrelated to the world and how the world works. You quietly and over some number of time, accumulate a position, and then you just never look at it again. And hope that insurance under the mattress never has to come due.
Right.
But if it does, it will protect you, because then that thing will be hundreds of thousands or $1 million a coin.
So right now, Chamath, he said this about a year ago. He says you can't predict everything going on with the economy, and we're seeing that a lot. He talked about banks being extremely levered, and we saw that with GameStop in particular recently, because GameStop, as we saw, they had a short position of over 140%. That really shouldn't even be possible. You shouldn't be able to have a higher short position than the actual number of shares that are being traded. It just shouldn't be possible. So what Chamath said really is coming to fruition now in 2021. He said this about a year ago, and we're seeing it to be really true. And Bitcoin since then has nearly tripled in price. And we're continuing to see a lot of uncertainty in financial markets, with the stock market, with everything going on right now. And speaking of that, with GameStop, right now, GameStop shares, they dropped about 20% just this morning, at the time of filming this, after their massive run-up they've had. So right now, GameStop is down 20% for the day. It's, at the time of filming this, at $260 a share. At one point, just a couple of days ago, it was as high as $400. I saw it in pre-market hours over $500 a share. And now many people are wondering, is this run finally starting to end? Is Wallstreetbets and Reddit, is this really starting to cool off now? Is everything sort of going to return back to lower prices, back to the way it was before? So right now, GameStop, it's not going to return to its $2, $3 a share anytime soon. They were able to have a lot more notoriety. A lot of people heard about GameStop and have been looking it up and probably purchasing stuff on their site. On Google Trends, GameStop has been the most searched topic, the most searched term relative to anything on the entire internet right now. Any other topic, GameStop has been the most searched over the last couple of days. It's been all over the news. So I don't think we're going to see GameStop drop anywhere close to what it was before this whole run, at least for the next 6 to 12 months. I don't think we're going to see it back down that low because these companies got a lot of exposure. They were able to raise more money, and it's just going to help their business, all of this attention in the short term. GameStop, in order to be able to actually succeed, they're going to have to shut down locations. They're going to have to pivot their business to focus more about the online sector of their business, e-commerce, versus worrying about their brick-and-mortar locations. Because right now the problem is with GameStop is a lot of companies that sell games. So if you're talking about like Xbox or PlayStation, you can just get all those games directly on the console. You don't have to go to a GameStop to get the physical disc. So it really has cut out GameStop completely from this entire process because now people no longer need to go and get a disc. They can just download the software onto their PlayStation or Xbox. So in the short term, just be careful with GameStop. We may see it go back up to that $400, $500 per share. Realistically, it's probably going to start dropping down. We don't know if it's going to continue dropping down the next couple of days or if it's going to go back up, but in the next, I would say, couple of months, we're going to see it slowly start to creep back down, not to that $3 a share, but it is going to start going down, and we'll probably see it under the $100, $150 mark pretty quickly. Speaking of the massive short squeeze going on, people believe that silver could actually be the next massive short squeeze driven by Wallstreetbets and Reddit. Silver, it jumped about 10-11%, and that is the most it's jumped in 11 years in a single day, driven mainly by everything going on, all this craziness with AMC, GameStop, and Wallstreetbets and Reddit. Right now, a lot of people are saying that silver will be the next short squeeze because silver is the most manipulated asset out of anything in the stock market. Banks have been shorting silver for years, and silver's price over the last 5 years really hasn't done much until recently. We saw recently in the last, let's say, week or so, the iShares Silver Trust is up 13% in the last week. Last 3 months, it's up 20%. But other than that, it typically stays right around the exact same level. Nothing really happens with it. But on Wallstreetbets, after we saw the craziness with GameStop, now we're seeing silver start to increase as well. Sunday night on Twitter, the phrase silver squeeze was trending. And we've been seeing a lot that social media matters in the stock market. A lot of financial institutions, they don't think that social media can affect the stock market, or they didn't think that until recently. But what people are talking about on Twitter, on Facebook, what goes on TikTok is actually really important to the stock market. And I think we'll see silver actually continue to increase in price over the next couple of weeks. It's just silver is a very different animal than a GameStop or an AMC. Because with silver, it's hundreds of billions of dollars, that industry. And when you're talking about GameStop, it was a much smaller stock. The market cap was very low when the whole thing started. Now the market cap is around $20 billion for GameStop, $10 to $20 billion when I last looked. But silver is much, much bigger than that. So you can't even compare GameStop and silver. And in order for everyone on Wallstreetbets and on Reddit to really make a difference and drive the price of silver up and cause a short squeeze, there's going to need to be a lot of money put in by tens of millions of people. It can't just be done by everyone on Wallstreetbets, because right now, if you look at Wallstreetbets, there's about 7 million people who follow that community on Reddit. And in order for something to happen to silver, we're going to need to see a lot more people than just that put in a significant amount of money, because right now, silver is a huge, huge asset. Banks have shorted it for years, and we're just going to have to see millions, billions of dollars put into silver in order to see a massive short squeeze. That being said, I think silver will increase more in the coming days and coming weeks. So you might want to add that to your portfolio. Could be something to keep an eye out for. Just put it on your watch list. But to have the same thing happen to silver as what happened with GameStop, I think is very unlikely. I don't think we're going to see silver 10x in the next year, 2 years. I don't think we're going to see silver do that anytime soon. So just keep silver on your watch list, because a lot of people are talking about it potentially being the next short squeeze. We'll have to wait and see how this develops over the next couple of days. I think it will go up, but I don't think we're going to see anything close to what's happening with GameStop or with AMC or Naked Brands. So in addition to all this, right now, AMC is currently sitting around $14.58 per share. A lot of people have been saying AMC still has a lot of room to go up after what we saw with GameStop, trading around $4. It was as low as $1.90 in December 2020. The one good thing about AMC versus GameStop or Nokia or Naked Brands is that GameStop, before the pandemic, their stock price was around the $30 range. A couple years before the pandemic, they'd been at the $35 range. And AMC has more of a future than other companies like Nokia, BlackBerry, GameStop. I think AMC has a much brighter future than the other companies. So if you're looking at it as a long-term investment, I think AMC is probably the best bet out of all of these stocks, because movie theaters, in my opinion, aren't going to go away. I think people like going to movie theaters. It may evolve into something different. There may not be as many seats. It may be more of a high-end experience with reclining chairs. But AMC has the brightest future out of all the companies right now. That being said, if we're looking at it in the short term, what the stock price is going to do. So right now, AMC has been able to raise close to $2 billion. They raised $1 billion in debt financing before all of this happened. Then they raised another $500 million in shares being issued. So now they have a lot of cash that they're able to use to keep the company from going bankrupt, to use to grow the business over the next couple of years. So that's a really good sign for AMC. They have a lot of cash on their balance sheet. Short term, the only way we'll see the stock price continue to rise dramatically is if we see another push from Wallstreetbets and Reddit, and I'm not sure if that's going to happen. We've already seen AMC rise over 300%, and in order for us to see another 300% return, something major is going to happen in the stock market or with a new wave of people putting money in, because now a lot of people have made a significant amount of money from AMC and GameStop, and I think people are going to start taking profits out. A lot of people I've been seeing in the comments are saying, we're just going to continue to hold on to AMC, continue to hold on to GameStop. I'm not selling. But the reality of this is that we are seeing the prices start to go down. They're not at the highs they were at. And while people do want to get back at large banks and financial institutions, people are also wanting to secure profits, because if people are making hundreds of thousands, tens of millions of dollars, and they're just regular everyday people, they're going to want to secure those profits and not risk it. They might keep some money in, but they're not going to want to risk their whole investment. And as people start taking that money out slowly, it's going to cause the stock price to come back down. It might not happen overnight, but it is going to come back down. Speaking of everything going on, craziness with the stock market, we haven't heard from Mr. Peanut, because Mr. Peanut is back. But Planters this year in the Super Bowl commercial, they're actually giving away $5 million to just regular everyday people rather than spending it on a Super Bowl ad. Last year, the Mr. Peanut and Planters commercial was seen by billions of people. They had billions of impressions last year, 11 billion earned impressions, and that was where Mr. Peanut, he died, and then there was the baby Peanut who came back to life, and this past year, baby Peanut has grown up, and now he's back again. But the reality is, right now, with Planters and Mr. Peanut, they're trying to do a more socially conscious thing. After we saw everything going on with GameStop, there had been people who had said they made tens of millions of dollars, and they're trying to give back to the community, give back to just regular, everyday people. Planters is doing the same exact thing. They're not spending money on a Super Bowl commercial, and with Gary Vaynerchuk and Vayner Media, what they're doing is they are calling them acts of substance. They are looking to recognize people doing charitable acts and will be distributing this $5 million to a number of different people. They didn't specifically say how many people they'll be distributing this $5 million total to. We don't know if it's going to be 10 people getting $500,000 or if it's going to be thousands of people getting a lot smaller amount. But all they have confirmed up until this point is that instead of doing a Super Bowl commercial this year, they will be announcing recipients of this $5 million on social media during the Super Bowl and throughout the next couple of weeks. So they're trying to just reward people, give back to the community, and not spend the money on the Super Bowl ad. But in reality, this is just a great marketing tactic. They're going to get a lot of people involved and a lot more attention to the company. We know Gary Vaynerchuk is a master in social media and marketing. So we'll have to wait and see how that goes. But it sounds like a pretty good idea. It's something different. We haven't seen this ever before. Companies publicly coming out and saying, we're not spending money on Super Bowl commercials. We're doing this completely different idea instead. So I think that will probably be a very good idea. We'll have to wait and see what happens. Next up is, I don't know if you guys have heard about Robinhood, all the craziness going on there, but recently they slimmed down the restricted list. It was as high as one point as over 10, 15 stocks on the restricted list on Robinhood. And that caused a lot of controversy. People said Robinhood should be for the people. Why is Robinhood restricting what stocks I can buy and sell? That is completely wrong. Now there's lawsuits with Robinhood, but right now they have a restricted list, and they say due to ongoing market volatility, they wanted to add a couple of stocks that they're going to restrict. Either they restrict the number of shares you can buy, they say you can't buy options for it, and everything related to that. So on the list right now, it says there's AMC, BlackBerry, Express, GameStop, Genius Brands, Cause, Naked Brands, and Nokia. For some of these, you can only buy as little as one share. For GameStop, they only let people buy one share of GameStop. And for other ones, you could buy a little bit more. But the reality is a lot of people are very upset about this because people want to be able to buy whatever stocks they want to buy. People don't want to be told they can't buy a stock. And in my opinion, I think people should be able to buy whatever stocks they want. If a company is going bankrupt, but people think it could possibly turn it around and they have a future ahead of them, people should be able to put money into that company. That's the whole point of the stock market, people being able to put money in companies, in any company they want. You would think they'd put it into companies that have a bright future, but people should be able to put money into whatever you want. And really, when you're seeing people who make millions of dollars from, let's say, a couple $100s, we saw this with GameStop. The reason people made that much money in the first place was because no one believed in GameStop. So when people were buying options and just buying shares, when GameStop was like $2 a share, the reason these people made so much money is because no one else thought GameStop had any chance. So no one was buying it, and that's why the stock price was so low. So people want to have that chance to be able to buy something that no one really believes in, or just buy whatever they want. And it shouldn't be restricted, saying you can't buy this, you can't buy that, because that's not the point of the stock market. The point of the stock market is people should be able to put the money where they want to put. They should be able to invest in any company they want. So with this list right now, they essentially just limit the maximum number of shares and option contracts that you can have. If you already have more, let's say you already have a couple hundred shares of GameStop or Naked Brands, and you have more than these limits, that's fine. You're allowed to keep those. You just can't buy any more. So you won't be able to open any more positions. You'll only be able to close those positions out, sell your shares, or close your contracts out. In addition to that, they said with fractional shares, you can't buy any fractional shares of these securities. And they said that the reason for this is something in their user agreement that they physically can't do that anymore for these couple of stocks. To me, it sounds like they're just making something up. They just don't want to do that. But that's what they said. You can't buy fractional shares of any of these securities. And in addition to that, no recurring investments. So if you have recurring investments set up for these stocks, where let's say you buy $50, $100, $1,000 every single month, they shut that off as well. So Robinhood had said at first they didn't allow these stocks at all. Now they're allowing them with restrictions. Either way, people are not happy with what's going on. They don't want to have restrictions on any stocks they can buy. They don't want to be told they can't buy a certain stock. So anyways, that's what's been going on in the last couple of days with the stock market, with Elon Musk and Dogecoin, Bitcoin, everything going on. But I hope you guys enjoyed today's video. It was a little different style. Don't forget to get your 4 free stocks, each valued up to $1,600 when you download the Webull investing app using the link down below. I hope you enjoyed, and I'll see you guys in the next episode.